I think we'll easily be at 120 because the U.S. will continue to consume oil, and the demand coming from the other economies will just take that picture up. At the same time, demand for food, wheat, corn, all of that, we are seeing continue to show strength, and I think that picture will stay going strong, and that will really keep the commodities going.
And that's one investor who expects crude prices to extend record highs. Crude oil continues to trade in record territory above $105 a barrel, and you can blame that on the free-falling dollar dropping to yet another record low versus the euro. Our next guest says the next threshold will be $108 per barrel, and it's all about investment flows at this point. Jonathan Kornefeld joins us today. He's Director for Asia at Hudson Capital Energy, and he joins us from Singapore. Jonathan, great to have you with us. So you actually think, though, that oil prices will drop in the near term. That's surprising.
Well, I do. You know, a week ago, I forecasted that the target was 105. That's what traders were looking for. And we broke that level, settled above it, which is a very bullish symbol, actually. And I think the next target is 108.30, and then beyond that, maybe 110.20. On the downside, I see a lot of support at 102.50. But I think right now the market really kind of has to figure out what it wants to do. If you look at the last couple months, you really saw the backdated crude futures rallying in sympathy with the front month. And that tells you it was really a fundamental picture. It really wasn't just the weak dollar. It wasn't just inflation causing a lot of money with nowhere else to go. But now that we've got this little $10, $15 of extra premium in the market, I think the market needs to decide before the heating oil season ends and before the gas season starts, do we really need to be up here? If we kind of lounge around here for another week or 2 weeks, you're going to lose a lot of the support on the downside, and all the speculative inflows that jumped into the market to get it up here, they're all going to try to get out the door at the same time. It's going to push us violently back down to $95, $90 very quickly. So.
Okay, Jonathan, I heard 110, you said, in the next few months or so. Is that going to be the high for the year?
No, I think we're going to pull back in the next couple of months, but then I do see 120, 125. Later on in the year. We are going to go back up. It's just right now the demand is kind of falling off. You're seeing a lot of demand destruction in the U.S. for gasoline as well as Japan. However, with 1,000 cars a day going on the road in Beijing, the rest of the world is really picking up the slack, and that will propel us higher. It's just the short term, I think the market really needs to regroup and see fundamentally, do we actually belong up here?
And Jonathan, when are we going to get back to basics and actually see demand and supply move the markets instead of these hedge funds and pension funds and speculators?
I think that's a very long-term question, and something like that you're not going to see for a couple of years. As long as people keep debating, are we running out of oil? We have nothing to put in place instead of oil, no alternative fuels that are really viable at the moment. You're going to see a lot of attention focused on this market. And you're going to see a lot of volatile moves, which is why I think this is the best time to be in options, because you can buy puts and get short the market without the worry of actually selling futures. So.
Okay, well, let's talk about inventories and supply at this point, because OPEC kept their output steady. And also we're seeing oil inventories maybe dropping in the U.S. How is that going to play into the price of oil?
Well, the inventories, the oil crude inventories dropped last week because the refinery utilization number went up. All that means is that the oil that had been sitting there, the refineries took it and turned it into a little bit of the product. It turned it into gasoline and turned it into heating oil. So that was just a short-term, 1 week thing, I think, where the stocks dropped. There is a good amount of oil in the U.S. I think there's plenty of oil, which is why I think we don't belong up here at 105, 110. The demand picture will still be there. There's still plenty of SUVs on the road in the U.S. There's plenty of cars in the U.S. So while I do predict in the next month or so we come back off again, the demand is there from not only from the U.S. but also from the emerging economies to propel us right back up again to 120, 125.
And going forward, Jonathan, what factors are you watching out for to affect the price of oil?
Let's see, factors. Well, there's always the Venezuela problems in Venezuela and Iran, but everything kind of seems to be humming along pretty well right now.
Yeah, you're not really concerned about Venezuela. You say Hugo Chavez is Hugo Chavez, and he'll do what he always does.
Right. Right. I think that's a lot of bluster. What you saw with a couple days ago with Venezuela and Ecuador and Colombia, the problems there with Chavez putting his troops at the border. The fact is there's about $6 billion worth of trade that goes on between those three countries. And for Chavez, the position he's in right now, he's a little weaker politically. and the economy is having some trouble. They have a lot of inflation there. So for him to really go to war right now would not be a good idea. And I think if there was to be some skirmishes, you would really only see oil flow stop between Venezuela and Colombia. You're not really going to see them turn their taps off to the U.S. unless this emerged into some enormous conflict, which I really don't see happening.
Jonathan, 30 seconds here. What about alternative fuels? Is this a good time maybe to think about investing in these sort of companies?
Well, yeah, some money's been thrown into all the alternative fuels, palm oil, jatropha. People say jatropha is the holy grail. However, it's the holy grail because no one really knows that much about it yet. No one knows if it's viable. You don't know the yield you're going to get out of each crop. In terms of palm oil, everyone just kind of jumps on the bandwagon for that, driving the price of it up, and it becomes not viable anymore. So anytime, in my opinion, you take food out of people's mouths so you can turn it into gasoline so people can drive cars, I think you're going down the wrong path, and it's not a viable long-term alternative.
Okay, Jonathan, some philosophy there. Thank you for that. Jonathan Kornfeld, Hudson Capital Energy. There's more to come here on Bloomberg Television. Stay tuned and watch us. Thank you. I thought that was the end of the show.